Hello traders, Gary Wagner here just after 1 o'clock in Honolulu, 7 o'clock in New York. It is Thursday, 12th day of March 2020, and this is the Daily Report for Gold and Silver. And what a day we have seen. The Dow continues to tumbling down again in double digits. Today, for example, it lost 2,300 plus points. That drop alone is amazing when you consider that we've seen about a 20% decline, 13% last week alone in the Dow in this short period. This is not a correction, but a deep correction, and the first time of that occurrence since the financial crisis in 2008. While there are some parallels that we can draw between them, there's a distinct difference, and that is the relationship between gold and equities. We'll talk about that as we look at the price board and our charts. Let's take a look at pricing first. Yet another volatile day on Wall Street as well as the futures markets. A significant drop in the Dow Jones Industrial Average. In fact, all of the major indices closed down approximately 9%. Bitcoin dropped 19%, and that's the lowest it's been at in quite some time, with the current price at $48.50. We wouldn't have thought that a couple of weeks ago. Gold, as you can see, is currently trading at $1575.90. When we look at palladium, it is down $144 at $1770. Silver lost 2%, $1568. And finally, platinum. Platinum traded down $10 at $771.80. What is also significant is dollar strength, gaining well over a full percentage point and coming very close once again to these moving averages that we have here that represent 5100 and 200 day. Let's take a look at our technical studies. We are starting our show today with a daily gold futures chart. This, of course, is in candlestick format. What is noteworthy about this chart is the Fibonacci retracement at the 50% level. That comes in at 1576. What makes it so interesting right now, and of course this fib retracement starts at 1447 up to the high 1702, and then we're looking at this side, the left side for our numbers. The 50% retracement takes us to really just above where the market hit its low here. These two double lows yesterday as well as last week. Today, it opened above it but closed at this key level. So there, on a technical basis, if it holds here, we could see a bounce. If it does not, the only real level to look at next would be 1545, which is the 61.8% retracement mark. There's another thing that I'm finding very interesting, and that is we've got the Elliott wave get up, and it simply is moving this fifth wave. I believe that there's a high likelihood that the fifth wave actually ended right here, which was followed by a correction. Now, it is an unusual correction called an irregular, and this is what I mean. If we look at this as at the top of our fifth wave, this would be a first, or the A wave. And then when we look at the B wave, you can see that the price it concludes at is above that of the A. R.N. Elliott labels that an irregular. Now, currently the market has had pretty much an equal low to the A. If it were to stay here, that would be called a flat, meaning that you have A and C waves both concluding at the same price point. Now, we were stopped out of our trade. We got in at 1668, I believe. Our stop was at 1631. The market is at 1579. So what that tells me is we kept a loose stop because of the increased volatility, but this market wanted to go lower, and I'm comfortable that we were stopped out because we could have sustained a much larger drawdown. To that effect, I think that when we do see a bottom, and if this is a correction that we're witnessing, we will see that final drive to take out 1700. This has been Gary Wagner, wishing you as always good trading. We will talk to you tomorrow for the weekly wrap-up and review. Bye-bye.